Free takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the German DAX today, September the 28th. We're coming into the new moon, which will be on Friday, I believe. So we'll keep a close eye on that. We're going to have Norm Winsky as our guest, I believe, next Thursday. He's going to be our guest, and we're going to have a special guest on Monday, a young lady who's written a book about W.D. Gann. Her father used to be my student. He passed away a little while ago, but when she was just a little shaver, probably about 3 years old, I first met her, and that was, oh my gosh, that was 29 years ago. So now she's in the business and is an aficionado of W.D. Gann and Gartley and some other things. So anyway, we'll keep an eye on that. But if we take a look here at the Deutsche Mark, let's try it again. This is the German DAX. You'll notice that we did go down, almost made a double bottom, and now we've rallied back and almost made a 61% retracement. The reason for this rally, of course, is related to our good friend over at the banking system over there in Germany, and that's Deutsche Bank. If we take a look at Deutsche Bank, this is what we looked at yesterday. You'll notice it went down and it hit the exact right to the ticks 1.618 expansion over the last 9 months. That came in at 1110. The low was 1108, I believe. And so now the market is going crazy today because it is trading at 1230. So we've left didn't leave a gap because of the narrow range that it had yesterday. I'll just show you that, but just to show you that there was not a gap left. But it is having a little bit of a rally today, and right now we're trading at $12.30 a share. Folks, this is no different than what's happened before with Lehman Brothers and also Enron, folks. I'll tell you, this is a real interesting situation because if you'll remember Enron, they used to come on the CNBC all the time and tell when the stock was 95 what a great buy it was, and 75, 65, 45, 55, 35, 25, 15, 5, and then finally 0. Just remember, it can be a good buy all the way down. It's good buy house, good buy car, good buy boat, good buy wife. So you got to realize that when the news stuff is going down, there's a reason for it, and you don't want to, really get involved with it when they start going down. And we'll see what's going. Remember, during the debacle of 2008, it was really an interesting one because we certainly had a situation where, Bank of America, I believe, got down to 3. Goldman Sachs, I believe, got down to 40 or something like that. By the way, someone's asked a question about the Henry Paulson thing, about how he got his taxes reduced. He was making $38 million a year back in 2007 when he took over as Secretary of the Treasurer. And he went from $38 million a year to $185,000 a year as Secretary of the Treasury. So he was really doing great things. But if you take a look at this next article that I posted in here to Tiger TV, you'll see that he got tax benefits in the neighborhood of about $470 million that he didn't have to pay. So that's a pretty good deal. Anyway, we'll keep an eye on that, and we'll be looking at it. By the way, one other thing, the part about astrology and how it works and stuff, I talked about Tom Pelk at Nomura Securities, and our good friend Norm Winsky was kind enough to send me the link so that we're able to put this up here. Just give me a second, and I'll get this link ready for us, and you can go in and look at it yourself. You can see all the statistics of what that Tom did, and all he did was he bought on the new moon. That was the thing, and I believe he held it for 7 days, and the market, outperformed the S&P, and it's still doing it to this day. That much I'm absolutely sure of. So just keep in mind that there are some things in these cycles of the planets that really work, but the problem is they don't work all the time, and that's where the problem lies. And nothing works all the time, so just always remember that also. Okay, the next thing we want to take a look at now is the overall stock market. First of all, I would like for you to take a look at what the New York Stock Exchange is doing right now. You'll see that we're not even having a 38% retracement as of yesterday. We did go down to a 61% retracement near the low of the day. Then, of course, we reversed, but we've had very little rally in the NYSE. We're going to be up a little bit today because the NASDAQ's up about 6, the Dow is up about 18, and the S&P's up about 3. It looks like, pre-market, but it's still not running way to the upside. So I think it's important to realize that's the overall market. Now, if we take a look at the NASDAQ, which is, of course, the leader of the pack, you'll notice when we look at this next chart, after we went down and tested the bottom there at 48.08, we rallied all the way up, 65 handles, up to the exact, right to the tick, 78% retracement at 48.74, and then we dropped about 35 handles down to 48.54, and then right now we're trading around 48.68. So if we do get above that 48.75, 48.78 level, that tells us that we're probably going to go a little bit higher. And folks, if the NASDAQ keeps going like it's going, it could go a lot higher. One of the stocks that's driving everything crazy, of course, is the big daddy rabbit in retail, and that is the Amazon. And if you take a look at this, you'll notice that we made a 1.618 expansion here on Amazon, and someone was asking me, should I sell this stock? And if you'll look at it, I mean, you're looking at a daily chart, and this stock was up about 2.5% in one day with a very, very wide-ranging bar, ideally at the 1.618. And, he wanted to sell it there. And I said, well, it's better, to wait one more day just to see if this level is going to hold. And we got up to 8.15 in the Amazon. So what he was going to do was to do a spread where, he's doing a debit spread. So he's going to be able to, sell a call and then do some, put strategies to keep his risk down, and then to be able to see it. Oh, just a second here. I thought I did that. Shut the front door and raise the rent. I guess I didn't. I was looking at it, and I thank you for reminding me, Mr. Z. I appreciate it. And we'll see it here. There you go. You'll see that's what I'm looking at here. And we got to 8.15. I don't know where we're trading right now. I know that Google is trading down about $6, but I'm not sure about Amazon. This should be near the top in Amazon, but just based on this, because you have multiple ABCD patterns forming up in this area, much like we did with the NASDAQ, but that doesn't necessarily mean they're going to turn down right away. That's why if you can learn to do, I know it's boring as heck, but if you can learn to do coverage, I'm not able to do a monthly chart on that right now, Mr. Z, but I'll try to do it a little bit later. And we'll take a look at 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, now we're going to take a quick look at silver. I posted the chart in. As you can see, we made a 78% retracement of the swing down from that other low that we made last month. And basically, gold is trying to hold the 1325 level. The level that you really want to watch on gold, the 61% retracement, comes in a little bit lower, right around the 1324 level. So watch at 1324 an ounce in gold. That should be something that could have some pretty good support. But failing there, we are going to be, looking lower. We've looked at this a lot of different ways here over the last few weeks, and we've had lower tops and lower bottoms now in the precious metals. We failed to break out to the upside above 1360. That's telling us that we're most probably, getting ready to, head south to complete that really large ABCD pattern at 1275. We're only $50 away, and given the way these markets are very jittery, we could easily hit that without any trouble at all. By the way, regarding that Amazon on the put that the gentleman was looking at, he was going to be buying a put and selling a call, which is double leverage, but he was able to do it with a really good price. Even when Amazon went up another $2, he was not hurt because of the loss of time decay. So anyway, that's why options are very good. They're not easy to figure out, but we've got some really smart people here at TFNN. When Think or Swim comes on, they have Kevin and those guys that do a great job with some really, really neat ideas. So, watch that very, very closely. Now, there's another market that is similar to like what gold was doing just the other day, and that, of course, is the crude oil market. And we want to take a quick look at that here so we can see it Well, just let me show you that first. Let me show you the support here in the gold at the 61% retracement. You'll see it very, very closely. These are interesting because it'll be making new lows than yesterday, right at a 61% retracement, and that's what you'll be watching. Oh, by the way, on Friday we're going to have Rich Anderson on as our guest. We're going to be talking about the potential turn in the grains, the wild swings that we've been having in cattle that have just been just unbelievable, the numbers that they hit as far as the Fibonacci summation sequence. They're just really doing quite well. But anyway, as you can see here, the gold does have a pretty good bit of support at that level, and you want to be able to say that as long as it can hold that level, then you've got a chance to see if it's going to make a attempt at one more time to see where we're going. Now, before I get back to the crude oil, since we're opening now in stocks and we're going to be a little bit higher, this is what we've been watching here in the S&P. As you can see, yesterday we went down and hit a perfect 61% retracement from the low that we made back on the 11th, and that has held the market. That means there should be some resistance up at that 78% level at around the 2163 and also 2157 first and then 2163 after that. And we don't know which of those numbers it's going to hit. All we try to do is we get there, we see if there are multiple, confirmations from various swings to tell us that, yes, this is the possibility of what we're watching. And that's an important thing. Last night was interesting because, we had a very interesting situation in the euro itself. I will get this here so you can take a look at it. Last night in the euro, in fact, it was real early this morning. I happened to be up when this was going on, but you'll notice that the euro came down and also hit a perfect 61% retracement at 111.85. And we've rallied quite a bit from that level. Now we're backing off a little bit, but it just gives you an idea that some of these numbers are, very, very good. And, we're looking at it. I noticed that Amazon is gapping up again. It's at 819. So this strategy of, doing a flat-out short sale was not the thing to do. And whether this is going to turn down from this level or not, I don't know, but I will tell you this, folks. I have never seen a company that is more efficient than Amazon. I don't know if you've ever been in any of these UPS stores. We have one in our neighborhood, a little, in the strip mall there. I mean, the whole store is nothing but Amazon labels. I mean, you just wouldn't believe it. You walk in there and it's just, one thing right after another. So it's really quite amazing. Okay, now the next thing we want to look at here, we are opening higher. We've got Amazon's the one that's going nuts. It's up, it's only up 0.5%. It's up about $4 a share. So an $800 stock, that's really not a lot of movement here. But we'll see. We got the S&P is up about 3, and the Nasdaq's up about 4, and we'll see how the rest of it comes in. Folks, there's one market we got to watch really, really carefully because it relates to the stock market. It's related to foreign exchange, and that market, of course, is the Japanese yen versus the U.S. dollar. And if it does break par, and it has a good chance of breaking par because we made our low 3 days ago and we have not gone anywhere. We haven't gone down, we haven't gone up, we've just gone sideways. That's usually indicative of a market that wants to go lower. And that's the whole thing that you want to keep an eye on, is to see if that's going to be the case. But anyway, watch that, because the breaking below par really sets up a much lower prices down around 95, which is the long-term, ABCD pattern in the Japanese yen, which would be very good buying opportunity because that's a 61% retracement off of the whole move from 2011 to 2015, and then from that level we'll get a pretty good idea of what we're watching, and I think that will be really interesting to take a look at. Okay, now we had another question about the volatility index. Folks, it continues to go lower. as we were looking at it just 2 days ago. We'll put that one up because I haven't updated it as of yet. But we're now down to the 11 range. We're almost ready to make new lows. We doubled in price, after that 0.5 was made, went exactly to the 61% retracement. Again, I think this is another testament that, even though Fibonacci numbers aren't perfect, when they do work, it does put a little bit of a tingling on the back of your neck and saying, wow, this is really interesting. Well, whether that's true or not, we'll have to wait and see. By the way, today on CNBC, Neil deGrasse Tyson was on, the famous astronomer, and boy, he is really entertaining and really does a great job at this. So the VIX is now at 1280. What happened? It rallied up? Shut the front door and raised the rent. That's last time I talked, it was 1180. Well, that could be something interesting. We'll see. Okay. Question that someone's asked is about the stock, and I'm going to bring this up and let you take a quick look at it so you'll be able to see it. We've already covered the Amazon, and I'm going to cover the other one just as soon as I can. Here, before we get to that, let me cover the crude oil, because this is an interesting one here. We've got a chance here in crude, and the reason why I say that, we'll be able to see here. Just to give me a break here, take a break, and then we'll take a look at crude oil.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've been asked to take a look at Facebook on a longer term chart here. This is looking at Facebook over a period of quite a few months. In fact, it goes back about 18 months, and you'll notice that it trades very nicely with the patterns. You can see the 3-drive pattern that it had way back in November. We backed off 50%, and then we made the ABCD pattern that measures to 128. We've been to 132 in Facebook. We're trading at around 129 right now, so it hasn't made new highs like we did with the NASDAQ late last week, but it has, Facebook has completed the ABCD pattern. It's also completed a 3-drive pattern that you can see there in the diagonal yellow triangles that you see. Those are drawn in on the Ensign charting package as Pesavento patterns, but basically they're Gartley. It's in butterflies. And, what you're doing is you're just seeing the relationship to all those waves. And, that's what we're trying to look at here. But this is where you really would want to be getting out of Facebook. It might go crazy to the upside. You could rebuy it if it got above the 133 level. But if you're in that stock, I would highly recommend that you take it off. And if it gets above 133, then you'll be looking at something that could take it to a whole larger level, but not until that time. We're only $1 away from where we were looking at as the major ABCD at 128. We're only 129. So that's something that should be, interesting to watch, if nonetheless. But if you're in the stock, I would highly recommend, you either really put a close stop in on your longs or liquidate the position and, try to buy it back when we get a correction in the market, which someday we might. Who knows? Remember, the Bradley model is going to be very interesting, to watch here because I don't have the Bradley model in. Oh, dear. It disappeared. I'll put the Dow chart up, but we'll put the we'll be able to take a look at this here. Anyway, around the 1st of October, which is next, this is the first of the week, we've got a potential turn here in the Bradley model to the upside. Now, the market's at a high level, so, you could be looking at a inversion in that, but we've got to watch it very closely because these markets have broken out to new high ground in some of them and certainly have not backed off too much. So what we want to do is to keep an eye on what's going on with the model right after the 1st of October. Remember, September is the cruelest month, followed by October. More major lows are made in September than any other month. Historically in the stock market, we backed off a little bit earlier in the month, when we had the big break into September 1st, 2nd. But now, we've taken all that back, and some indices like the NYSE has made a new high. Now, the NYSE is lagging a little bit early this morning, but, stocks have only been, trading for about, 15 minutes. So it's not that can change in a matter of seconds. So that's the main thing. Okay, now, someone asked a question about the name of the book that really describes the Federal Reserve. The first book was written back in the 70s called The Secrets of the Temple. I don't remember the author of that one, but that was really a popular book, back in the 70s. But the one that is more popular now, of course, is The Creature from Jekyll Island. And that's where the Federal Reserve was formed on Christmas Eve, 1913. And it tells the inner workings of how the Fed actually works. Remember, even though their building is right on Pennsylvania Avenue, it's a huge building, and it looks like a federal building. Folks, that's a private bank that you're looking at, so take a look at that. Anyway, the New York Stock Exchange Index does not look bullish. I mean, we're just barely making a 382 retracement here, and that's the main thing. I believe it's Jekyll Island is in Georgia, if I'm not mistaken, but I've never been there, so I don't know. But I thought it was in it is in Georgia. Wow, I got something right. This is a good thing. All righty, let's take a look at one other thing that we want to be watching here really closely. I wanted to show you, just give me a second to pull it up, and we'll be ready to talk about it, and that is our dollar index. And we're still in this really tight trading range, this little beautiful. It's amazing how quickly you folks Google all these things and post them in the room so people can actually look at it. I'll tell you one thing, when you're doing a radio show, folks, everybody out there is fact checking, and because of Google instantaneous fact checking, you can literally if somebody says something, you better have your ducks in order because they're going to challenge you on it. On Tuesday nights here in Arizona, we have a little poker tournament, and I played in it yesterday. And of course, all these people, they have little plug-ins for their power cords right at the tables, and all of these young guys have little mini pads and all this other stuff that they're using. And somebody will say something, and they'll go into Google and check it right away. And if they're wrong, they'll just literally really call them out on something. So you have to be careful of what you say. I mean, you just want to be try to be as reasonably close to the truth as you possibly can, and then you'd be. That's the name of the book, Gator. Yeah, Secrets of the Temple by William Greider. That was a very, very popular book. It's not as good as read as The Creature from Jekyll Island, but they're both very, very good. So just remember that you should read about it just to see how important the organization is, because they control the money supply, and that's where the real beauty of some of this stuff lies. Now we want to take a look here at another stock that we've been asked to look at, which is Alphabet, also known as the Google. And as you can see here, Google since last February has made multiple tops here, three tops at this 790 level. It's trading down just a very little bit today. So keep in mind that if it ever gets above that 795 level, that would be a valid breakout, and you'd be looking at something to be could go a whole lot higher. But right now, it's in this spot where it should have a little bit of a problem. That's the key to watching this stuff. You'll realize in that September sell-off, Google could hardly, back off at all. So that's another important thing to watch very, very closely. I have another question about the gold and silver. Folks, I don't think you have to worry about the gold and silver on a breakout to the upside unless we break above the 1360 level. If you want to take a look at the gold from the long side, the 1325 level, 1324 is the number. We've been to 1326, 1325.60, so that's $1. But gold is so accurate and it doesn't miss these numbers very often. So I would tell you to wait, for the 1275 to be a buyer of the gold. And silver is of course lagging, and that's another reason to be patient and wait for it. So that's what I feel on gold and silver. I haven't changed my mind. It's got a chance, but right now, not so much. Watch it at 1324 in the gold today, because we've made several attempts at that level, been within $1, and then asking, well, why should I wait for $1? If you feel comfortable that you can't wait for $1 now because it's 1328, but I think you have to go within a half $1 of the actual number. That's the way I look at it, and they're accurate enough that you can do that. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the NASDAQ up a little bit, the Dow up a little bit, and the S&P up a little bit. Not much going on. The chart that I'd like for you to focus on today, of course, is the New York Stock Exchange 60-minute chart. As you'll notice, we went down and made a 61% retracement, and you'll see that the rally that we had yesterday was pretty much non-existent. We haven't even made a 382 retracement, whereas we've made a 78% retracement in the NASDAQ, and we've made a 61% retracement in the S&P, but we haven't even touched anything close to that in what the real market is doing. And I've double-checked these figures to make sure that they are correct. But the market is just not nearly as strong as the financial pundits are trying to tell you, folks. This is the overall stock market, the largest index, the most fairest because it's broadly based, and that's the main thing. We've had one other question about the corn and wheat and beans. I really like the corn market. We're about 4 or 5 cents away from where I think is a good value. If you get into corn somewhere around that 326 or 325 level, you have to risk about 10 cents, which is $500, but it's got some pretty good potential. The other trade that looks really good from a longer time frame that we were able to see a few weeks ago was that VIX index when we made the 135 pattern. We have tested that pattern again. We're trading at 12 and change now in the VIX, and I believe, looking at a November or December call on this is the way to go. Those calls more than doubled in price when the market rallied up to the 61% retracement here a few weeks ago. And of course, we're near the lows again right now, but that just means that I think the value is still there. That's the main thing of what we're watching. So remember, this is the end of the week. We also have a new moon coming up, but this is when they usually do the typical window dressing, where they move their portfolios around in some of these mutual funds. Remember, there's 15,000 mutual funds, folks. That's a lot of business. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.